Welcome to my YouTube channel, Newbie Explorer. Today, we're diving into an interesting analogy that might just change the way you look at investing. We are continuing our journey into the secrets of the stock market, guided by the wisdom found in Peter Lynch's books. But let's take a sweet detour and talk about something we all love, sweets. You know, candy, cookies, all that sugary stuff. They're irresistible, right? They give you that instant gratification. It gives you a quick rush, a sugar high that makes you feel on top of the world for a moment. But then what happens? You crash. That initial burst of energy fades away, leaving you feeling worse than before. And in the long run, indulging in too much of that sweet stuff is bad news for your health. It can lead to all sorts of problems, from weight gain to more serious health issues. Now, think of short-term trading in the stock market like eating candy. It's tempting and can be thrilling. You might make a few bucks here and there with quick trades, in and out. The adrenaline rush is real, but so is the risk. You could lose big just as easily as you win. The market is unpredictable, and those quick gains can disappear in an instant. It's a sugar high followed by a big crash. The excitement is short-lived, and the aftermath can be devastating. Not a recipe for long-term success, right? Just like with sweets, too much short-term trading can lead to financial health problems. So, how do we avoid the stock market sugar crash? How do we ensure our financial health remains intact? We need to find something healthier, something that gives us long-term gains, not just a quick rush. This means focusing on solid, long-term investments that grow steadily over time. By doing our research, seeking advice from financial experts, and being patient, we can build a portfolio that stands the test of time. Remember, slow and steady wins the race. So, let's make smart choices and aim for sustainable success. After all, a healthy financial future is the sweetest reward of all. Let's talk about apples. They might seem simple, but there's a lot more to them than meets the eye. They're not as exciting as a bag of candy, are they? Candy is flashy, colorful, and gives you an instant sugar rush. But apples are good for you. They give you energy, vitamins, fiber, and they help keep your body running smoothly. They keep you full and healthy. Eating apples regularly can improve your overall well-being. Eating apples is a long-term investment in your health. It's about making choices today that benefit you tomorrow. Long-term investing in the stock market is like eating apples. It might not be as thrilling as a quick win, but it's far more rewarding. We're looking for quality companies that will grow steadily over time. These are the apples of the stock market. We're not trying to get rich quick. Quick schemes are like candy. They might give you a rush, but they don't last. We're in it for the long haul. Just like eating an apple a day keeps the doctor away. Investing in quality companies for the long haul builds wealth over time. Investing in quality companies for the long haul builds wealth over time. It's about patience and persistence. Now, finding these quality companies, that's the trick, isn't it? It's not always obvious which ones will grow. It's not as simple as picking the shiniest apple at the store. Sometimes the best investments are the ones that require a closer look. We need to do our research. We need to dig deep into financial reports, understand market trends, and evaluate company performance. We need to understand the companies, their businesses, and their potential for growth. It's a continuous learning process, and their potential for growth. Just like nurturing an apple tree, it takes time, effort, and knowledge to see the fruits of your labor. The good news is you don't need to be a Wall Street whiz to find this information. It's more accessible than you might think. Peter Lynch, a legendary investor, talks a lot about common knowledge and how it can be a powerful tool. But what does he mean by that? What exactly is common knowledge in the world of investing? He means information that's available to everyone, not just the experts or insiders. You don't need a secret password or a backroom deal to get it. Think about it, it's all around you. You see a company's products every day when you go shopping or run errands. You hear about their earnings on the news, whether it's good or bad. You read about their corporate actions online in articles and on social media. This is all common knowledge, readily available to anyone who seeks it out. It's out there for anyone who's willing to look and take the time to understand it. Now, just because it's common knowledge doesn't mean it's easy to understand. It requires effort and learning. You need to learn how to interpret this information, how to read between the lines. You need to learn how to separate the signal from the noise to find what's truly important. But that's where the fun begins. The journey of learning and discovery can be incredibly rewarding. Learning about the stock market can be intimidating, but it's also incredibly rewarding. It's like learning a new language. At first, it seems impossible. But with practice and patience, you start to understand. You start to see the opportunities. So there you have it, folks. Short-term trading is like eating candy. A quick sugar rush followed by a crash. Long-term investing is like eating apples, slow, steady, and good for you. Remember, the knowledge is out there. You just have to be willing to look for it. And hey, if you want to learn more about Peter Lynch and his investing strategies, hit that subscribe button and ring the notification bell so you don't miss out on any future videos. Until next time, happy investing.